This video is based on the technical analysis of Monero, and at this point we are indeed on the monthly chart. And just to recap quite a bit, what happened in the past is that the market had given us a very nice W structure over here, right? It started at this point, came down, gave us a structure, and the market went up to close at that level in line pretty much with where it had started. And then we saw again later price giving us what is an overextended M structure over here, which had a neckline at that point. And this particular structure started at this point, and ideally we want to see the market actually closing at this point sufficiently below the neckline, heading back up to the neckline, and then pushing further down to around this level to also close, as I said, in line with where it had started. And that's exactly what happened, except that price seems to have stopped more or less at this point. And the reason why price stopped at this point as opposed to moving further down is because we had this very nice W structure, which had a neckline at that point. The neckline is now also a very strong level of support. Nonetheless, it is still quite possible that we may see price actually move further down to complete that structure. Just bear that in the back of your mind, especially because I know that at this point in time, a lot of traders and investors actually looking at this area over here, where the market had given us quite a nice double bottom, which has a neckline at that point. And also, a lot of you guys are waiting for price to close sufficiently above that neckline. And once price does so, I know that a lot of you will actually buy at that point, as the anticipation is for the market to move further up to complete this very nice double bottom, as you guys can see, right? But as I said, because in the past the market had given us this overextended M structure, which has a neckline at that point, we may potentially see the market only head up to this level to just retest that neckline, and at that point we may potentially see the market move further down to around this level to complete that overextended M structure. To add to that, just also bear in mind that we have this candlestick over here, and as you guys can see, it is a bearish candlestick with a small body and a relatively long lower wick. And what this means is that at the bottom where that wick ends, we actually have a lot of money there. And you guys know that the markets will always go to where the money is trapped, right? So what am I saying, guys? So what I'm saying in other words is that buying or selling actually within this region is a bit risky. It's a bit risky, as the market may go in either direction, right? But myself personally, at this point, I would rather wait. And actually, before buying, I'd rather wait for the market to close sufficiently above that neckline. And on the lower time frames, I would then look for an opportunity, right, to buy, and my take profit would be around this level. Why do I say that level? That is because it's a very strong level of resistance, and it's also the neckline of this overextended double top, as you guys can see. And remember also that I said we may potentially see the market move further down to around this level, and that is because the structure, this overextended double top, started at this point, and we may potentially see the market move further down to close more or less in line with where it had started. So we just need to be careful, right? Myself personally, as I said, I'd rather wait for price to actually close sufficiently above this neckline, and on the lower time frames I would then look for a scalping opportunity to around this level. And at this level again is where I may potentially look for those potential sell opportunities, as it is quite possible the market may push further down to around this level to complete this very nice structure over here.